Hi guys, welcome back to the channel. If you're new here, please subscribe to support the channel and to see more videos like this one where we analyze the market the minimalist way. So by keeping it simple, by making a simple and clear analysis, by using simple and clear indicators. Today I'm on crypto and I'm using three indicators: the bottom stop signal, the levels and zones, and the RSI Exhaustion. Today I want to make a slightly more speculative trade. It's a bit riskier than the typical trade that I like to do and I share with you guys. But I am pretty confident that this trade will play out well. And of course, we will, in any case, we will play it safe. So we will try to be safe as possible. So let me explain what's going on and how the trade is going to be. So we see a downtrend in Bitcoin here, and then an upward movement here, then a small retracement, and then another upward movement. If you look closely, you can see that this upward movement here is about the same as the new one. Okay, you see this new one is a bit higher, but not that much. And this is, by the way, another kind of setup, the one here 1, 2 and 3, another kind of setup that you can take with the bottom stop signal and the RSI Exhaustion. I will maybe make a dedicated video on this in the future. So if I do, I will leave a link down below, so have a look if you're interested. But basically what you can do is to take advantage of this bottom here. You see that the RSI goes up here, so the RSI goes up, the price goes up as well because it makes a bottom here, another bottom at least slightly higher, and so you should expect from here an upward movement about the same length of this one. So as you can see, this trade would have been successful. I didn't trade this one because, well, I didn't see this, but it's okay. We have another opportunity here, which is a sell opportunity. Why? And why it is a bit more speculative? Because as you can see here, the price keeps increasing, okay? The price keeps increasing, especially here. It increases because, let me draw a trend line here. So it's moving higher, okay? Do you see this? But at the same time, the RSI is going down. Okay, you see, the RSI goes down, the price is going up. So what happens is that we have divergence. We have divergence between the price that goes up and the RSI which goes down. What I like to see, and this is the reason why it is a bit more speculative, I like to see, well, first of all, a price action a bit longer. So maybe like this tops here and then another top somewhat higher here. So some more candles in between, and the same of course with the RSI between the two peaks here, but it's okay. The other thing that I prefer is to have at least the first peak in the RSI to be overbought, so above here. If it was like this, it would have been much better, but this is still okay to me. As I said, it's a bit more speculative. Why I take this trade even if it's a bit riskier? Because I am confident in what I'm doing, because I have further confirmation from the levels and zones, because as you can see, we have a strong resistance up here and a strong resistance here. So it just turned into a support, but I don't believe it being a support because, as I said before, there is a movement of 1 to 3, which is the same length, which ends up pretty much here. We have this strong resistance here, and we have another strong resistance up here, and moreover we are in a downtrend movement. So you can see this as a downtrend, a retracement, and then another downtrend. Of course, we don't know where the trend will go to the downside, but we can definitely speculate on the fact that the price should fall from this point. So we need to check three conditions. The first one is to have divergence, and we just said that we have divergence. It's not the greatest, but it's still okay. The second thing is that we have exhaustion in the RSI, and right here it's bullish exhausted, which is exactly what we are looking for. And the last thing is the simplest one, which is to have a top, and we have a top. So the price goes up, divergence, the RSI is exhausted, okay, and we have a top. We can confidently place our trade, knowing the fact that we also have a strong resistance here and a strong resistance here, which are pushing the price lower, and we are in a major downtrend. So the trade will look pretty much like this. The entry price will be around this level here. Regarding the stop loss, well, we need to be a bit more conservative here, so I'd stay here, which is which is above the buy area here. You see the buy area? Well, of course it's above this highs here, it's above the buy area, which ends up here. Right now it's pretty much here, but it's also above these candles here. You see this candles here? If you want to be extra conservative, you can go as high as this, so that you are higher than this peak here. But it was, I mean, it was just a short movement here, and then it always stayed below this level here. So I will stay with a stop loss around this level here. Regarding the target, well, it's hard to tell because we don't have any structure down here previously. So even if I go back in time, so the most conservative target will be this one. So this level down here, you see, because we have a bottom here and another bottom here. So the target, I just set it to be this one. So if the price goes down, we should expect it to reach at least this level, and we know it can because we have a lot of evidence that it can. Maybe it will go even beyond this level because we are in a major downtrend, but it definitely, if it wants to go lower, then the price will touch this level. And instead, if it wants to go higher, then we are a bit safe from the fact that we are above the buy area, above this structure before, and so we are enough safe. As I said, it's a bit riskier than what the trade that I typically take, but the risk-reward ratio here is also a bit higher, so it's okay. Once in a while you can take this kind of trades, not because they're just riskier, but because, okay, they are riskier, but we are still having a lot of evidence that we are correct in our analysis, and I'll try to play it safe. So as the trade goes along, I'll try to play it safe. There's really nothing much to say about this because the price is moving lower and lower. The only thing that I would say is that in my trading account, I was able to get into the trade at a slightly lower price. So because of this impulsive movement, so I got into the trade at this level here. Let me check. Yep, exactly. With a stop loss which was still above here, and so the target is here, and so the risk reward ratio is a bit lower than what I said before. So it was before a bit higher than 5. Right now it's a bit lower than 5. It's still okay. I mean, the price just went down, and the most important thing is that I already moved my stop loss to break even, because when I saw this price going down and then I waited the next candle and I saw this kind of sideways movement, I decided that it was the time to move the stop loss to break even. So in the worst case scenario right now, if the price comes back up, I'm out at this level up here, and so I'm making money because I'm making this tiny amount of money. It's a tiny amount, but I'm still making money. But the key thing is that I'm not going to lose any money, which is the most important thing. Number one rule in trading: don't lose money. And so in the worst case scenario, I make money. In the best case scenario, I make almost a 5x return, which is excellent. As I said before in the video, this trade is a bit riskier than the typical trade that I like to trade, but I was going to play it safely, and as you can see, and as I just said, I moved the stop loss to break even when I saw that it was the right time. So this sideways movement confirmed that I could move the stop loss to break even, and so I did. I hope you guys are finding this interesting. Be sure to like the video if you do, and I'll keep you posted, of course, on the next price action. The price moved a bit higher, but it didn't touch our break-even level. It stayed well below our break-even level, and we just got a top, which well, of course it's not a top I would trade, so I would not initiate a trade because of this top and because of this exhaustion in the RSI. But of course it is something that is welcome to see, because it means that we should be protected from further upward pressure. I mean, on a technical point of view, there is nothing that has changed since our initial analysis. So our initial analysis and our expected target, so this level down here, is still absolutely valid. So I don't see any evidence for the price not to reach this level, and this is why I'm very confident that we will reach that level. Of course, we need patience, but we have all the time in the world for waiting this trade to be over. Another top came along, which should indicate that the price will eventually move lower. I don't see anything wrong with the RSI compared to the price. It's just that the price is moving sideways, and so the trade is taking longer. But we can definitely expect the price to reach our level. Of course, if the price decides to go up, we are enough safe because we are at break even. But considering all this price movement here, which is basically sideways, I don't see any particular issue for it not to go any lower. So we just need to wait some more. I know it's frustrating to most traders to wait all this much, but in the end we can predict the target, we can predict where we are safe with our stop loss, but we cannot predict how much time it will take a trade to be over. So there are times and there are also situations that I made videos about, and I will make videos about, that you place a trade and then the price within 1, 2, 5 candles just go to target. And there are trades which I got into before, and I will surely get into in the future, because they always happen, that you place a trade, you are confident that you will reach the target, but then it lasts forever, because I mean the price goes down and then up and then down and then up and then down, up, and never decides where to go. That is the most frustrating situation you could get. But that is also the situation where most traders compromise their trading account, because they do stupid things like moving the targets, moving the stop losses, taking profits too early, or allowing for more losses. So it's where the difference between an emotional trader, a beginner trader, and a rational trader, an advanced or pro trader is laid out, because there is the situation. In that case, it's the situation where you see the difference. In this case, we are something in between because it's taking a bit too long, particularly because we have this kind of sideways movement, but I'm confident that we can definitely reach our target. And we got the target. So the trade took a bit longer, a few candles more. As you can see, that here it went down, decided to go down, but then made another kind of 5-hour sideways movement, but then eventually got to our target and is now even beyond our target. So maybe the downtrend will continue. I just don't care what it's going to do, because right now, first of all, I got a profitable trade. So I closed a trade with almost a 5x return, which is excellent. And the second thing is that I don't know what it's going to make, because right now I don't have any technical evidence that tells me where the market is going. So I always trade opportunities when I clearly see, I can clearly see where the market is going. I can clearly make an analysis which is supported by technical evidence from the overall price action, but also, most importantly, from the tools and indicators that I tested over time and on which I built confidence over time. When I see those opportunities, I know that they are the best opportunities I can filter out of the market, and so I take them. But right now, I don't know whether the market is going down or up. I don't care. I'm just happy because also this trade is over, and it's been phenomenal because it's an almost 5x return, which means that I could even lose the next 5 trades, 1, 2, 3, 4, 5 trades straight, all losing trades, and I'm still profitable. And this is why you can be profitable over an extended period of time, because you build your trading account trade after trade after trade after trade. So maybe once in a while you get a losing trade, but when you have a minimum risk reward of, let's say, 2x, which is my minimum I like to use, of course yours could be different, but when you have a minimum return of that range, and then your average return moves between 3, 4, 5x, like in this case, which is, I mean, it's very good, then you are sure that you are going to be profitable over the long term. So guys, I hope you enjoyed the video. If you did, make sure to like it and subscribe if you didn't already. If you have any questions, feel free to ask down below. And guys, I'll see you in the next video.